Hello, welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of GBPJPY, British Pound, Japanese Yen. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis. And do not forget to check out the Forex analysis playlist on my YouTube channel for the analysis of other pairs like Euro USD, GBP USD and many more. So let's get started. So this is the Forex chart of GBP USD, and if you remember correctly, yesterday in my video I told you not to go for a sell at the resistance, and I said some pretty awesome things if you remember correctly. Okay, and if you're watching the videos for the first time, so anyways, let's do the analysis first. Let's try to understand what is going on in the market, then we'll be jumping to the strategy part. Clear? So if you look at the chart here, then one thing is very much clear to us that this market is in downtrend. Okay, this market is in downtrend. Or in simple words, sellers are dominating this market. Number of sellers are higher in comparison to the number of buyers. But what I was focusing or what I was stating in my previous videos, that though this market was or is in downtrend, but still market was witnessing sharp recovery in the market. Whenever market was seeing selling pressure, immediately we could see a sudden recovery in the market. So which clearly signifies that, or which clearly proves that market has got some hidden buyers. Market has got some hidden buyers present in it. Okay, and that was the main logic of not recommending shorting or selling at the resistance yesterday. Okay, and apart from this hidden buyers and all those creepy stuff, we can see that I just have a single line drawn on this chart. Usually I draw 2 or 3 lines, but in the chart of GBPJPY, this chart I have just got single line, and as you can clearly see, this was the resistance for the market. This trend line was acting as a dynamic resistance for the market, and if you look at the chart, then it is pretty clear, or it was pretty clear, I'd say, that whenever market was trying to go up, it was facing resistance, or it was facing selling pressure from above, and this trend line has been acting, or has been acting as a strong resistance for the market for quite some time. And till yesterday, okay, till yesterday, it was acting as a strong resistance for the market. Okay. But here there was something that we need to focus here, and the main reason why I did not recommend the short level yesterday here is that the market psychology. Okay, market psychology has changed. Market is changing, that many traders fail to understand. Okay, and if we go to weekly chart here, then you can see that market was in downtrend. Okay, but the weekly chart is telling us a slightly different story. You can see that this market is in strong uptrend, and this was just the consolidation. So the downtrend we are seeing on the 4-hour chart, okay, is just the consolidation, and you can clearly see that on the weekly chart market is forming hammer kind of candlestick patterns for the past couple of weeks. And as you can clearly see that whenever market was going down for the past couple of weeks, market was forming hammer pattern on the weekly chart. You can see that there are price rejections from below. So this was the confirmation that yes, though the market seems to be in downtrend on the 4-hour chart, but overall this market is under the dominance of buyers. Okay. And most importantly, if we try to understand the market psychology here, then that gives us a clear-cut confirmation that something is wrong with this market, because whenever market was reaching or hitting the trend line previously, you can see that after one touch, 2 4 candles, or after forming 1 or 2 candles, market was immediately coming down. But here you can see that market has formed, okay, here market has formed more than 10-15 candles, but still market was not ready to go down, and this was the main reason I told you not to short the market. Okay, and right now you can see that market is trading above this trend line. Okay, and right now market is kind of very critical. Still there is a battle going on. Try to understand the market psychology here. Previously, whenever market was hitting the trend line, it was coming down. It is the duty of the market. Okay, but this time when market hit the trend line, it was not coming down, which clearly signifies that try to understand the market psychology, which clearly signifies that buyers are present. Though market is standing at resistance, but still market is not in the mood of coming down. It clearly tells us that buyers are present in the market and they are giving their best fight. They are trying their best to take the price upward, and you can see that somehow they have succeeded in crossing this trend line after a long time, and market is trading above this trend line. As there is not much volatility in the market right now, therefore still we cannot consider this as a breakout, but still after a long period of time market is trading above the trend line, and this is a big thing. And if we go to the forex sentiment meter here, okay, you can see that in the forex sentiment meter, 70% retail traders have taken short position and 29% retail traders have taken long position. You will find the forex sentiment meter on my website abhilashhazarika.com under forex 101 section. So forex sentiment meter is telling that retail traders are mainly shorting the market, but we must not forget that 90% retail traders lose money. Retail traders lose money because they fail to understand the market psychology. But here I'm trying to make you understand the market psychology. So my dear friends, please do not make the same mistake like the retail traders. Otherwise, you will also fall to the same category. Okay. And if you go to the Forex volatility calculator here, you can see that there is not much movement going on in the market right now. In the 15 minutes, you can expect a volatility of 3 pips. In the 30 minutes, you can expect a volatility of 6.8 pips. And in the 1 hour, you can just expect a volatility of 7.8 pips. And in the 4 hours, you can expect a volatility of 24 pips, which signifies that there is not much volatility in the market right now. And therefore, there is a good amount of chance that market will be giving us a good move. Okay. And moreover, I have also started a pro trader membership program where I'll be sharing my personal analysis with you guys for just a monthly membership fee of $15 per month. If you're interested in knowing the best pairs to trade, then please sign up for this membership. Anyways, let's jump to the chart again. So what should be a strategy? Okay, the strategy is simple. We will not short the market. Though market is standing at resistance, we will not short the market because see, market is not in the mood of going down, and we can clearly see. Therefore, we will only short the market. Okay, we will only short the market below 152.50 level. We will only short the market below 152.50 level, and we will only go for long trade if market crosses 153.50. We will not trade as long as market is trading in this box. Okay, if possible, try to make a box here and do not trade. Okay, do not trade on the market as long as market is trading in this box. This is your no trading zone. Keep in mind, this is your no trading zone. Only short the market below 152.50 level, and only go for buy if market crosses 153.50 level. This is your only trading strategy in front of us right now, because right now we do not have much volatility. Okay. Therefore, I will not tell you to go for any buy or sell here. Observe the market, wait for the market to give you a proper direction. Okay. So this is it. Hopefully you've understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See you tomorrow again.